if you're an investor, you have at least 2 portfolios that you take care of. Now, if you don't have those 2, how can you even call yourself an investor? Now, I can see you thinking, Lucas, what are you talking about? Well, a serious investor always have multiple portfolios that he or she can take care of. Now, one portfolio should always be the serious one. You know, the one that we use to make serious money with, and that is used for future situations. And there's a second one. Now, that's your play portfolio, or your fun portfolio, or your learning portfolio. You know, as you can see over here, in which we take risks to learn, but also to use the risk and make a nice return just once in a while. Now, this portfolio is also used to make a loss, and that's totally fine. Now, the question is, why is it really necessary to have 2 portfolios as an investor? Well, that's the question that I will be discussing with you in this video today. Now, my name is Lucas, and as an investor from excelwealth.com, I'm always interested in sharing my ideas on personal finance, investing, and real estate. And if you stay until the end, I'll even share with you how I divide my portfolios. Now, if you're still watching, that just means either you have multiple investment portfolios, or you're thinking, what is Lucas talking about? I think I should pay attention for once what he's trying to tell me right now. And if it's the latter, I think it's great because, like I mentioned before, the most important reason why you should have 2 portfolios is that you should always have one to learn and take risk with. Now, normally, if you would ask me if I invest in cryptocurrencies, my answer actually would always be the same. And that's no. I don't invest in cryptocurrencies. Now, if you would ask me if I own cryptocurrencies, I would still say no for now. But last year, I had somebody give me some cryptocurrency, in this case, Bitcoin. But this was actually slightly different because he created an account for me, sent some Bitcoin to it, and told me, Lucas, you got to learn to trade with it. So you got to learn to trade with it and make some money with it. Now, I told him that I didn't want to do it, so in the end, I just gave it back to him. And yes, if you take a look at this amount of Bitcoin, I'm sure you would have said, something like, Lucas, you should have kept it until this year. Then it would have been worth over $50,000 per Bitcoin. And then by owning only 6 Bitcoin, it would have been over $340,000 by now. And yes, I get it. This is all speculations. Now, if this is your learning portfolio, you can make a nice side income with it. But if you do it wrong, you might lose your side income. And then again, it's your learning portfolio, so that's totally fine. Now, we always need the space to learn, just like a kid learning how to walk. So I always have a few €1,000 in my learning portfolio. And last year, when the pandemic actually caused the stock market to crash, of course, I had my learning portfolio. I had my learning investment portfolio ready to invest with, and that's what I did. Now, using that money, I purchased 1,000 Shell oil company stocks for about $10 each. And about a week later, I sold them off for about $16 each. Well, I think you can do the calculations on how much profit I made within a week. Now, that's what the learning portfolio is for. You use this money to learn how to use and learn how stocks actually work. And you use this money to take risk. But in the end, you use it to make a fun return with it. At least that's what I think. Just now and then, just do this. Now, the most important thing is not to make this a day job, because if you make it a day job out of this, one, it could be too stressful, and 2, you're taking the money too seriously as well. Now, this year we had the GameStop stock. Same idea. If people are rallying all about a certain stock, what will I do? Yes, I will join in, just to make a few $1,000 and then take it out again, just to run along with everybody else. And of course, this portfolio is never meant to be joining in for the long term. Like if you purchase GameStop stocks and you're still holding on to the stock just because you joined in too late, I'm sorry, but most likely nothing special is going to happen anymore. Okay, Lucas, I get it. Very interesting. But can you tell me, what investments are you looking at right now then? And that's a very great question now. Now, if you've been following my channel, you know that I share my ideas on different stocks now and then. And currently, I'm looking at the stock called CCIV. It's a Churchill Capital Corp. They are doing some interesting things lately. So yes, I'm keeping my eye on them. And the moment I have more information, I'll absolutely share that with you on this channel. The moment you've made some money with your learning, fun, risky investment portfolio, the next step is to create an investment portfolio that is meant to be making a stable return with. Now, that has to be risk-controlled investments. What do you mean risk-controlled, Lucas? Well, investing in companies like GameStop are just a fling, are just a temporary situation, and you can't be betting on these situations like these, not at least for the long term. But investing your money in companies like Tesla or Apple might also not be the case, as these companies do not really have a real drop or a really high peak in a short amount of time. So the volatility is gone, and therefore, this might not be the money-making stocks within 1 or 2 years. Now, this step should always be a second step, as you should be making money first with investments, and then later on you should be retaining that money to be able to make a stable return with that amount. This investment portfolio should not have huge losses, as this should be somewhere like your retirement portfolio. So you should know very clearly what to do with these investments. Okay, Lucas, that all makes sense, but can you tell me how to keep this risk controlled? Well, that's a great question, because one of the investments that I make here are index funds. Since these are already nicely varied, and you know very much, how much requirements you actually purchase these indexes, the only element that you need to add as an investor is time. Because the moment you have a high risk investment, as long as it meets all the requirements of a potential performing stock, time is your best friend, as it will average out all the high peaks and all the low drops up to an average. And that is how you can control risk. Right, so you have two portfolios. One is for playing, fun investments, taking risk, and the next one is your money-making portfolio. Anything else, Lucas? Yes, I do, but that's because I also use my stocks to set aside my money for short time as well. You have to see like this. Short term is something what I mean within 1 year. So if you're using your money within a year, that's short term. And if you're wondering why, well, that's very simple. I have multiple streams of income. Like one of those is my rental income from my properties. And instead of leaving the rental income on my bank account, I set these amounts aside each and every month as well. The moment I need those funds, I can take them from my rental income investment portfolio. And if those investments are not positive at that moment, that just means I can't touch it and leave it in for them. Now, you have to see it like this. This portfolio is not meant to be making serious returns. Now, it's not that I have these portfolios to lose money, but you have to really see it like this. I've used this portfolio that instead of leaving this on the bank account, and setting it aside, because leaving it on a bank account, it just costs me money. Okay, so you're not leaving it on a bank account, but you're leaving it in a savings account. But is this really a safe option? And yes, that's a great question as well. But you have to see it like this. Savings accounts will cost you money. The news article here, as you can see, all major banks here in the Netherlands could charge you a negative interest rate the moment you have more than 100,000 euros on it. So it doesn't make any sense to leave your money on the savings account. This is why I leave my money on a short-term but rather safe investment account. This way I can make a few extra percent per year. I can take out whenever I need the money. And this portfolio is really meant as a side income. And short term, of course. So it's not for the long term. Short term, just a few percent to outpace the inflation, of course. And since you stayed until the end, I would like to share with you how I divide my income into all these investment portfolios. Now, my learning and risking portfolio only had 1,000 euros to start out with when I just started out, I think like a decade ago, like 14 or 15 years ago. And each time I made a huge return with it, I would only take out the profits, place the profits from my from my risky account to my stable return investment account. And this is how I grew my investment account in just a few years' time from only 1,000 euros up to 100,000 euros. And currently, my play account has 10,000 euros in it. Just to, to have some fun with it and with a little bit more money, because 1,000 euros is not that much, If you make 20% or 30% in just a week time, then 10,000 euros is a lot more to have fun with. And with that, I would like to thank you for watching today's video. Happy investing. See you in the next.